The 2026 Roth rules are out, and a couple of small changes could actually make a big difference if you're paying attention. Let's keep this simple. For 2026, the Roth IRA contribution limit is 7,500 per person. If you are 50 years or older, you can add another $1,100 catch, bringing you to 8,600 total. Now, quick context, this is slightly higher than 2025. So if you are already maxing this out, this is just a little more room working in your favor. And remember, these limits are per person, not per household. Now, let's talk about income limits because this is where most people sometimes get confused. In 2026, the phase out starts at 153,000 for single filers and 242,000 for married filing jointly. If you are above that, you may not be able to contribute directly. That's where you'll hear sometimes about backdoor Roth. It's still allowed under the current rules, but it's not something you just check a box on. It requires coordination with your existing retirement accounts to avoid unexpected taxes. Now, one thing a lot of people forget, you still have time to make 2025 contributions. You can contribute for last year all the way up to the tax filing deadline. So, right now, you may actually have two opportunities: finish 2025 and start building into 2026. On the Roth 401k side, for 2026, the employee contribution limit goes up to 24,500. If you are 50 years or older, you can add another $8,000, bringing that to the grand total of 32,500, depending on your plan, of course. At the end of the day, this isn't about chasing limit. At AG Thomas Wealth Management, we look at the Roth strategies as part of a bigger picture. Your current tax bracket we look at, your future income, and how we create tax efficient income later in retirement. Bottom line, Roth accounts can be very effective, but the rules matters and the strategy should fit your situation. If you want to make sure you are using this the right way, reach out to me and we will go through your options step by step.